Hi, everyone. Welcome to Analyze Your Trade, episode number 50 for September 25th, 2018. We are broadcasting live on YouTube at 4:30 p.m. Eastern Time, and I am also posting the audio-only version of all episodes as podcasts on Spotify, iTunes, Stitcher, Podbean, and other podcast directories. Today, we will be discussing your trade ideas. So over the last few days, about 30 people submitted up to 5 symbols each. And I put the list together, which you should be seeing on the screen right now if you're watching the video. And we're going to get through as many of those as we can. My name is David Kosmitter. I'm the creator of TimingResearch.com. And I developed this show with Dean Jenkins of Follow Me Trades. But he's off this week. Michael Filighera is here to moderate. And I'm going to go ahead and turn it over to him.
Afternoon. I'm going to hope that now everybody can hear me and actually see me. Can you hear me, David?
Yeah, sounds
okay.
Sounds better now.
Sounds perfect. Great. My name is Michael Filighera. I am logicalsignals.com. It is my website. I started as a market maker here on the coast. I have traded in several countries and United States, and again, instead of trading options now, and so
okay. Looks like Michael's still having some problems with his internet connection. So, Anka, let's start with you if you want to tell everyone a little bit about yourself.
Hi, everyone. Thank you so much, David, for having me on the show. My name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com, which is a trading education company that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. This is something that I have been doing professionally for about 15 years. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. And I'm the designer of an institutional proprietary trading system that is based on multiple layers of price support resistance, correlated with specific trigger times throughout the day for the AM session and the PM session. And this is specifically for day trading. Specific price zones, chart synchronicity, and divergency, a strict set of trading rules, and a 10-point scoring system that keep my traders and myself safe within these trading hours. I'm also an active contributor to some of the financial media outlets that you see here on the screen, and you probably don't see it on the screen. Okay, so I'm just gonna share with you some of the financial media outlets. That is Technical Analysis of Stock and Commodities, Benzinga, Your Trading Edge, Active Trader, Crane's Detroit Business, and you probably see me at the Traders Expo if you have been coming to these events. And that's a wrap.
All right, thank you, Anka, and Larry. How about you?
Yeah, hey, thanks, David. Yeah, Larry Gaines. I've got a site called PowerCycleTrading.com. I've been actively trading the markets for over 30 years. I started out my trading career trading oil and ran one of the largest oil trading groups, the International Trading Desk, for a large oil company or oil trading company for 10 years. And basically we traded everything, oil plus all the other commodities and foreign exchange. So real diverse background, big background in commodities. But I started my own company, PowerCycle Trading, back in 2010. And it's an educational trading site where we focus on the directional trading systems that I've designed. And then we use options for those type of trade setups for, better leverage and define risk. So directional trading with the overlay of using options. So check us out.
All right, thank you, Larry. And Michael, are you back? Looks like he's still having some connection issues. So let's go to the first one on the list, JPM. JP Morgan? And Anka, would you like to start?
All right. Yes, I was just going to share the chart in just 1 second. Just give me 1 second here. All right, let me share my thoughts with JP Morgan. And here's the thing with JP Morgan being a financial, we do have the FOMC meeting tomorrow. And we also have the projection meeting. So I expect a lot of volatility to come into these financials. So JP Morgan has been retracing for about 3 days following the doji that we've had here set last week. So we hit this resistance from these prior tops from back in February. And right now we're getting a really mild correction. We do have support into the 116, so I wouldn't engage in anything just as of right now. I would wait until after FOMC for a firm decision. And I think the projection meeting is going to be very interesting, as that is going to lay out whether or not we're going to have other rate hikes throughout this year. And I think that I will definitely put JP Morgan on hold until after FOMC. I would probably take a look at it either after the FOMC tomorrow, specifically after 3:30 or so, or just wait until Thursday for a better decision. Right now, it has a $2 range. Has the potential for a continuation higher. I do have it on my watch list along with Goldman Sachs and actually Bank of America. I have dabbed into the XLF into the sector earlier last week, and I had a swing trade and I closed it with profits, not very large profits, but still really nice risk to return on our trade. And I would really wait on JP Morgan until after the FOMC for a better decision.
All right, thank you. And Larry, what do you think about JPM?
Yeah, so basically, we had that beautiful spike up here, and it's just, you can see it's just turned over, pulling back. I would not do anything on it here. I definitely wouldn't short it, wouldn't buy it. Let it pull back into these retracement zones. It's currently into the 382. It could, we'll see what happens tomorrow with the FOMC, but it could pull back anywhere to this 116 down to 115. So we'll just see what happens. But into this area here, you've got really nice support. So just let it pull back. Next target would be right around here, 116, and then down to this, 115 level where you've got a lot of nice clusters of moving averages. So just be patient, see where it pulls back. And if it starts to hold here tomorrow, then, this could be an area where you could look at potentially getting in, depending on your, I like to go to the lower time frames and see if they start shifting. So right now you do nothing.
All right, thank you. And Michael,
I am here.
Oh, okay.
You guys can hear me?
Yeah, sounds good now.
Good. Shall I take over for us?
Yeah, go ahead if you have any comments about JPM.
JP Morgan? Yes. Yeah. Actually, I do. I following just what's already been said, I do not disagree with what each guest has said already, but I am going to lean more towards what Larry is saying. I really wouldn't sell it here, and I really wouldn't buy it here based on the fact that we have a lot of news coming out tomorrow. Should the Fed hold rates or even boost them a little bit, that tends to turn around and everybody feels it's a bullish move for the banks. And so they all start jumping in and running it back up. I think that it still holds a pretty good chance of running up and creating a new all-time high above 119.33. And if it does that, then I would imagine that we might get towards 120, 122. Now that's just all based on should the news come out favoring JP Morgan and the other larger banks. If not, then I do believe that this pullback that's in force is going to continue. In fact, if I'm looking at a daily chart and the daily chart is telling me that it just actually gave a sell signal, and that would suggest that we might see a move back down toward the 200-day moving average, which I show at 111.70. And so it could go down and test it. The first is going to come. I use a 9-day, but only on my shorter term charts, and it's starting from the daily on down. And that's sitting just below. It's sitting at 115.82. If it breaks that, then I could see it sliding a little bit more and then heading for 114, and then maybe bottoming out, or not bottoming out, but just finding a low about between 112.50 and 111.50. And then I think then it becomes a buy. And then again, you're going to have to base that against what market conditions are at that particular time. So having said that, next on the list is Trex Company Inc., T-R-E-X. And I believe we started with Anka, so we'll go back, and Anka will continue with you.
Hey, Michael, thanks. I can hear my echo. Okay, so Trex to me from the daily chart seems to be a little thin. I don't usually trade stocks that are this thin, even on the weekly charts or the daily charts. I only trade something that exceeds at least 1 million shares average volume per day. But I could give you my take on this stock on Trex. The weekly chart is sitting right on the 10 EMA at $79.31. If this level is going to be breached, I see it much lower, at least into the 70s zone, the next pullback into the 70 zone. We're trading into a continuation of the weekly, so the move has may not be done, so we can see a steeper correction, like I said, at least into the 70s or the 65s. I don't like the way it is setting up right now. We do have a much powerful sell on the monthly level if we breach the $76. Daily chart, however, it is into minor support. So it found support at the 78 level. It's just balancing between $78 and $80. If you get a rotation over $80, you may still have a little pop to the upside. I don't think it's going to be a major pop because it's sitting at crossroads when it comes to the weekly and to the monthly chart. It may still go a little bit higher into the 82.5-ish area, and you do have a lot of resistance from prior price action into the 83, 82, and 85. 85, again, it's going to come with some resistance and some turbulence there. So it's not going to be an easy, smooth rotation to the upside. We don't have a really nice tradable void from this rotation. So I think it's still going to be a little bit of trouble zone. It needs to stabilize a little more. There have been a lot of mixed signals. We have topping tails here suggesting more sell on the way, and then we have the doji. We have the little bit of pop, and today just telling us that we may be ready to see a reversal over $80. But again, this is not something that I like to trade. Some of the traders love to trade options. My first preference is to trade the stock and to swing trade. This is not for me.
Great. Thank you very much. And Jim.
Larry.
Yeah. I'm sorry, Larry.
Hey, no
sorry
problem.
about that.
Yeah, so right here, you can see it's rolled over, but you're into kind of a support level here. This is a 50 simple moving average. So I would not do anything here. It could easily fall down from where it's currently pricing down to about right here, 77. And then you've got a nice base of support right there as well. So what I'd do is just let it leave it alone and see if if it pulls back down into here, then this is the area you want to watch closely. And then if you start breaking this, you can see all the price action right there. You start breaking that on a closing basis, then there's really good potential for more downside down here to the next target of 72 and a half, which is a Fibonacci extension level. Now the other way to look at this is if it does hold here, this price action, it could have just kind of a retracement rally into this, cluster moving averages above it, which are 8 and the 21. So right here, do nothing. It could go either way. So you just wait it out. And then if it gets down here to the lower end, starts breaking on closing basis, short it. If it gets back up here, fails, short it for a retracement, or what I call a cycle high retracement short. So right here is kind of the middle. Do do nothing.
Okay. And Larry, did I hear as I was coming back in that what you try to do is you use options and stock, or just options?
Just the options, yeah.
Okay, so just the options. So if someone were long the stock, let's say, and they're kind of just trying to determine what they need to do, would you have any type of a recommendation in terms of they can use an option to protect, or?
Yeah, so if you're long, well, it depends on where you're long, but if you're long the stock and worried about a further, say, correction down, I'd go out and I'd sell an out of money bear call credit spread, see what, I don't know what the premiums are, but I'd sell something out of the money above these moving averages to kind of lock in a hedge. So you could do that and, sit on your long. But if you're coming in looking at a new position, do you buy TREX? Do you sell TREX? My position would be it's a no trade.
And thank you very much for that, because I'm going to agree with you. Although I was looking also at the daily chart, and on the daily, at least on my, because I use a skinnier bar chart, it appears that off of the high at 90.74, which was beginning of the month, the stock has come off in what I can see and best label as a 5-wave structure down. And that's on the daily. Now, normally when we see that after a high, there's a couple of things that we can conclude. We can conclude that the rally's over. We can conclude that it's likely going to do a 3-wave bounce higher. And right now, based on some Fibonacci calculations that I just threw up on the chart, it's going to find resistance at 81.10, 82.95, and then 84.45. Now, if those contain any rally attempts, then the next stage would be an additional 5 waves down. And then we're going to start getting into those levels that both you, Larry, and Anka had mentioned before. It should drop below 75. It should start heading towards 70. And it might even get down to 65, depending on how severe it all turns out. What it has in its favor right now for a bounce is that on the daily and on my stochastic momentum, the momentum definitely has been to the downside, but that seems to be bottoming and beginning to turn higher again, which could suggest that we may see a rally again back up to those resistance levels that I gave. If it only came in at 81, 81.10, I think that's a very dangerous level in terms of there will be some more hard selling happening and more people getting out of the stock or just getting out of positions. Next on our list is Netflix. It's been fairly active as of late in both directions. Anka, one more time with starting with you.
All right, so Netflix is very interesting on a longer time frame. The monthly chart has a trigger over 377.50. And in fact, the coiling has begun and we have reached this resistance, and this resistance on the daily chart has put a print on price ever since it snapped up to the 423 level. And then it came back down, formed the support level at the exact location of 377.50. Netflix then gapped down, meandered lower, tapping very close to the 200 SMA, also coiling around this median price of 310, rotating higher. And again, this has become now the minor resistance zone for Netflix, the 377.50. It tapped onto this resistance. It came back down. So far, it's riding the 20 SMA train. It's trying to pop a little higher. So it's trying to establish a bull pennant. And the trigger would be 377.5. Today has had a really nice recoup from these 3 days that it pulled back from. And today it actually caught the 10 EMA and pushed higher on the daily. So really nice progression, but it's still not yet out of the woods. It really needs to establish and it really needs to break above 377.50 in order to break out higher. 377 right now, it's resistance. We do have the the higher lows right now. So the pattern is definitely trying to lift. We had a nice catch into the 50 SMA on the daily chart, and today we rotated from that 50 SMA higher. I still don't have a trade in Netflix, but I would be very interested to see if it breaks the 377 level. I would definitely be interested in a buyer around that breakout area, or even on a test and possibly a retest over, just to prove that that's not a fake move up or a peekaboo high. So ideally, I would like to see it over 380 zone or 382 zone, and then the pullback. It depends on how it's going to set up. Right now, it's not ready to do anything, so it's just basing.
Okay. You're right. That's exactly what I see as well. Larry.
Yeah, thank you. Looking at Netflix, the one thing that stands out with Netflix is that you've got earnings coming up in a couple of weeks. So Netflix tends to trend into earnings. So the thing that I like about Netflix is to watch it for setup to the long side primarily. I mean, it doesn't mean it couldn't go down either, but just looking at the technicals, it is stuck in a nice kind of range. You can see it's been chopping and kind of coiling. And I like to look at what I call kind of volatility, kind of squeeze compressions. And so I've got a number of those. You can see here on my chart, I've got a 2-hour, 4-hour daily. And so if we look here then to Netflix, you can see just that price action, how it's churning sideways. And again, like Anka said, that if it starts breaking this 377, that's where you want to kind of trigger in. If you look out here to the weekly, you'll see that, it's got some pretty decent support right here, that 350 level. And then you've got earnings here coming up on the 16th of October. So the tendency is, 1 or 2 weeks prior, markets start, looking to usually buy Netflix because the earnings have been pretty good. You can see here the last earnings cycle, it started pushing up. This earnings cycle pushed up into earnings, pushed up into earnings, pushed up into earnings. Now, potentially could push down, but the tendency is for it to push up. And so if it was to, I like this, I'll be looking to, do something with this on a break of that this area here. You can kind of see those tops. I'd put in a trend line or something, really focus in on that, and look to take a shot at that with options. So you could do a nice, option trade setup here on a break of 377, and I'd be looking for a target up here to potentially, 400. So that's kind of my take on it.
Okay. And again, just when dealing with the options, and particularly going into earnings with options, would you be more inclined to recommend an out-of-the-money call or selling a put?
No, when you're going into an option release, you want to buy options because the pricing components for option will be the implied volatility and the time value of the option. So as you push into earnings, you're going to see implied volatility will always go up. So you don't want to be selling premium. You want to be buying premium. So you want to buy options, and that is also the benefit too. If you're long an option and the implied volatility goes higher, then that's going to affect the price of your option. So here, if I just pull up a implied volatility study here, I could just hold on. If you've got a second, I'll just pull it up. You'll see it. It's just the normal. It's just the normal price pattern for any option trade. Is the implied volatility will go higher, and that will push either the price up or down depending on the direction. If I can find my chart here. So you always want to buy options into an earnings release, and then after earnings release, you'll see volatility will just totally collapse. And let me see here. Well, I can put it here. I'll just go here, and I'll put in implied volatility, and you'll see how it creeps up here on anything that you're trading. So here's implied volatility. I'll add that to my studies. Up there. And then you'll see down here, I'll just kind of put this up. Let me see. All right, so here's your implied volatility. And you can see that see how it pushed up into earnings here. And so it'll start pulling up there as it gets closer and closer, because the market's uncertain. It doesn't know what's going to happen. And so, traders that are long, they'll start maybe rolling out of their long stock and buying calls, or they might buy puts. So it always, pushes up the implied volatility, which is, one of the big pricing components of options.
Okay. For me in Netflix, I'm big on pattern, and I'm taking a look at the pattern off of the 423 high, which was last June, and then how it came off, and then how it's rallying off of I think it was the August lows at 310.93. I do not find that. I think the initial rally off right up to that level that Anka gave us, which was the 377 level, just above 377.50, that appeared a little bit more bullish to me. But then since it just does not strike me as a bullish move. And even though it's kind of just been wedging a little bit, and it's been very much range bound. So my take on this is, it's like, I agree with what both of you said. It's like that 377.50 area is going to continue to provide resistance. The market somehow is kind of leaning a little bit towards going up and testing that level. And what that could possibly mean is that there may be a lot of stops sitting just above there. And on that break, you're going to get a real rush of buy orders, because most people would want to wait for the breakout to get long. And being an ex-market maker or an older market maker, I have found that many times there are firms that will go up and just test that. And the reason they're testing is they want to sell it. Once that break happens, they want to sell to all those new buyers, I suppose, or whatever. But if the break was strong enough, and I would say to above 380, and if it kind of sailed right through there and sailed right through 380, then I become a more interested buyer for a continuation of the rally, then up to the 400 level, 420, and then, of course, the old high. On a momentum basis, the momentum is very reflective of what the stock has been doing, just kind of channeling and churning back and forth without making any real progress to either side, either the short side or the long side. So I would suspect that momentum's going to break if the move happens above 377.50, or if the stock starts to break down below 340. So again, range bound, it just sits right where it is. We do have, as Anka mentioned, we have a 9-day or a 10-day she uses, I believe, on a SMA, and then that 200-day SMA is down about the 315 level. If anything comes out and it starts to shove itself below that 315 level, I think that's not healthy for Netflix, at least price-wise. So I'm going to leave it that right now, I would be on the sidelines. If it continues to pop in advance of the earnings, and again, this I think is because I'm an ex-market maker, and market makers really kind of come in, and we were trained to be basically contrarians. And so when I see a lot of premium being pumped into option pricing, I become more of an interested seller. Now, I would not just sell an option all by itself. So if you're trying to take advantage of premium, you're either going to have to do it in a spread, vertical, or if you're finding that this is a box and you think that this box that the Netflix prices are sitting in, then you could wrap it all around and do what they call an iron condor. And I think both of those positions could be very valuable here in Netflix, but you're going to have to space it out, and you're going to have to really work on what price and how you want to do it, and which strike prices you want to use. But you're right. I think it just kind of sits in channels, maybe continues to work itself higher. If it breaks 377.50, look to see what the follow-through is, and then make your decision from there. And if not, then I'd be looking for a break below 340, and then hopefully not below 315 on that. Our next stock is WRD, And that is Wild Horse Resource Development Corp. And not a company or a stock that I am familiar with at all. But we're gonna let Anka start.
I was going to say, Michael, like I've never traded the stock.
I know, we're both in the same boat.
Yeah, so I just went back on the chart just to see when it started trading. So that was December 2016. So yeah, no, not very familiar. I could see that it has pretty good steady volume. Not a lot of information to the left hand side. I really am not a big fan of IPOs and swing trading IPOs. But anyways, going back to the chart pattern, we do have a doji on the monthly chart, and let's say the midsection of this doji is just crossing through the 10 EMA, and we had the lift off of this 10 EMA, but a pretty wide for this price range for a $23, $24 stock, or for this price range. It has a really wide stop. I mean, the risk here based on the monthly chart, because this is the support level, and it basically came in August. It gravitated into this section here where we had this chop zone. I call it the chop zone because it was like, it wasn't a pullback, and then, wait a minute, it was a pullback. It was, and then it started to roll back up again. So it was an indecision. It was, I would say, a 4-month of indecision phase here. And then it just got the lift from this prior period, from the beginning of the year. And then now what I see it had done, it had just triggered slightly a monthly rotation over $24, a very, very brief visit, and taking out this high. And right now back down to $23. In my opinion, this kind of setup would be extremely nice if we hadn't had this really wild, steep kind of risk level. So from $18 to $24, that is an increased risk for, especially looking at the price range. So monthly chart is ready to trigger again over $24. Maybe that was a little peekaboo, and maybe it's getting ready to explode again to the new highs here into the $28 and $29. The weekly chart, however, it's finding support, it's finding resistance. I'm sorry, it's finding resistance here. I was going to say that the new support level is the minor support level that is deriving from this prior pivot high that was established earlier this year. And right now it just clustered into this $18. It just dug deep into this $18, rotated up back into the $24, and it may be ready to break out again, but I doubt it. I think that it needs a revisit to the $22 zone, maybe 21.5, and rotate off this top. I would like to see a better setup lining up here. I think it's super sloppy, loose. I wouldn't do anything right now, and especially that right now it's trading into a resistance. And the thing is that here, if we trade below $22, we may come back down to 18. So that's a huge uncertainty, and it's for this price, and I'm going to repeat myself, for a $24 stock is sure doing a lot of swings here. So the daily chart, again, we can see that it just projected into the $24. A lot of resistance here that is deriving from this prior support zone from the I think it was in May. It's sometime in May and June. And so far what I see here is that the pattern is downtrending. So Michael, you said something earlier that you're big in patterns, same, and likewise here. So I'm seeing a top, I'm seeing a series of descending tops, a series of descending bottom. This is the first sign that the stock may be reversing again. We have a bottom, higher low, and we're missing a higher low here in order to explode higher. So this is my take. I would just hold back. I wouldn't engage in any trade right now. You need to see more confirmation of price and more data for this stock. So volume wise, I could see, like, I'm really surprised. It never popped on my scanner, but 2.2 million daily chart looking pretty good. So again, this is something that I would, keep you know, set an alert. Let's look at it at $24. Let's see what it does. Not something that I would aggressively buy.
Very well said. I like that. And when I come around to do mine, Anka, I'm going to ask you to put your chart back up for me.
Sure.
If you don't mind.
I'm going to leave it up. Sure. Mm-hmm.
And Larry.
Yeah. So, so when you look at it, yeah, again, you can see, if you can see my chart here, this is the weekly. So you've got good support right in here, you know, call it 22, 21, you know, down in here. So you can see it's kind of like a foundation, right? So if you start consolidating, holding, building this foundation, it's going to hold. It'll be a real deep, thick, you know, strong foundation. So it's starting to try to do that. So you can see the price action here, see where it came up here, paused for a bit, and then exploded through, came back down, went under. So this is going to be a major key area. So, you know, call it $21. So if this holds, keeps holding, that's real positive. And if this breaks, then it's going to, you know, be right back down here to 18 pretty fast. So right here, you do nothing, but it looks, you know, this has potential. It's interesting looking stock. I don't know anything about it either, but right here, I would just wait, let it see if it pulls back, consolidates. Now you can see here, this is a multiple different Fibonacci levels, but the big one right here, you've got a 618 and a 50% retracement level that are all lining up together. And see these tops, these highs right here. So you see it pushed up in here to that resistance and totally failed. And this is kind of what we call a shooting star. So it's kind of a negative pattern. So do nothing here and then just let it see if it holds this level in here, 22. If it starts consolidating here, this will be the next layer of support. And then it's got potential to get through that 24 and move up to 25 and then, you know, continue on up. But this is a, you know, one to follow. But I would just be doing nothing here. Just see if it can start consolidating, holding this 22, 23. If that doesn't hold, then this is a key level. Now, if this holds, then be looking for a breakout of 24 to 25 to 27. So right now, they'll be patient and just kind of wait it out. You may have to wait till earnings because I think earnings will be coming up.
You're right.
Probably earnings will be the next catalyst, and it's probably waiting for earnings. So right here, you can see the November the 5th, so a couple weeks off. But I think it's just probably going to churn here waiting on earnings.
I do not disagree with what either one of you has already said. This is great. I love having like analysts in agreement. I think that was very, very well said, Larry, and also very well said, Anka. And when I look at this chart again, pattern-wise, if indeed from the 2967 high, which was back in April, down to that low that it made at 18 in August, is the complete correction off of the high, then using Elliott wave, what I would have to say is that from that low at 18 up to the first time it hit just below 22 at the end of August, then it slipped. That would be the wave one. Then it slips back down, does not go to a new low nearly, but that's did not create a new low, and that's good. That would be wave two. Now, on the third wave, in either direction, your third wave in an impulse wave, larger, is always going to be the strongest and the longest. So far, what I can basically count is that it's subdividing, if indeed it is going to be a third wave. And the first wave within it was backed again to that 21, 25 area, then a little slip back down to like almost 20, and then it goes. But today, it poked its nose above 24, didn't like it, comes back down. A third wave would just keep going. So if that indeed finished that little third, and then it's going to start to come down, it may have already exceeded where it should go. So as Larry pointed out, it is a shooting star pattern, which is not a positive. It would be a negative in this current position. And that would suggest that we're going to have continued follow through. The stock can't drop below 22. If it drops below 22, then I'm going to expect a much larger move down. If it holds and then continues to rise with more speed than it's doing right now, then yes, it's breaking out, and there's a good chance that they're just going to continue. It will continue to be bought, and that it will run up and possibly make new highs above 30. In the meantime, the setup is pretty much right in line with what Larry and Anka both said. If I'm looking at pattern as it's been left today, it's only 3 waves up. That's not positive. That would be more of a negative. So this pullback, if indeed that's what it's doing off of today's highs, continues, it can't break 22. If it holds above 22 and continues to rise and makes an additional high above 24, then you're in good shape. Then it's a 5-wave structure. And then you can make further decisions based on that as to what may or may not happen. But right now, like everybody else, I would be sitting on the sidelines unless you already have a position in the stock. And then I think you have where your breaks are. Below 22, you don't want to be long. Above 24, you do. So moving along, and then when we're done with Bank of America, we're going to do a round robin and just do a couple of things differently there. Bank of America, very widely held stock. Volumes always fantastic. Not as much as in their heyday, but good volume daily. Options trade like May wheat. So, what do you think, Anka?
Algos love it. So it's a highly algo traded stock as well. So Bank of America. And by the way, Michael, I loved your interpretation of the WRD. It is exactly what I see in it as well. So I love to see that everybody's on the same page. All right. So Bank of America, once again, financial, tomorrow FOMC. I'm not going to reiterate that, but current monthly support is at 27.70. We're trying to desperately hold this 10 EMA right here into the 28.70. So support's 27.50. I'm sorry. And then we had the rotation, but we really didn't push high enough in August. So August left us with pretty much a doji. Right now we're drifting into the $30, and we have been creating this pendulum effect, $30 to this high into the $31 and change. Still not trading above this prior pivot high into the 32.80, but nonetheless, it is a bull flag formation onto the monthly chart. So it's still looking very bullish. We have the moving averages below price. We have support level here. And it looks like it really wants to pop higher for the first time in a very, very long time. In fact, you can see it here from the charts. And last year was the first time when we actually popped above this 200 simple moving average. It was a stock that was severely beat up back in, what was it, 2009. Yeah. So right now, for the first time, it's showing like really signs that it really wants to rip a little bit more to the upside into the $35, into the $40. And that's the monthly interpretation. The weekly chart, however, still setting up, still a bull flag. I mean, we're still, we have rooted out pretty nicely here from this doji up into the 50 SMA, rotated up, challenged this prior high, made a new high, and then we're pulling back mildly here. So it is a matter of holding support at $30. $30 is of the essence. If we hold the $30 zone, we're going to be good to go higher. Really choppy resistance zone. So here, I think that, you know, if you want to be long, and I'm not long Bank of America just yet, but if you want to be long, you need a little bit of proof you need to see the price trade over at least $31.40. $31.50 would bring more buyers to the table, and that's a weekly chart. It has been a very tough weekly since we had this move up back in July. And August came in with a retracement, and then take a look what happened here. The weekly triggered the rotation. It went slightly higher, never challenged the prior high, and then it went back down to revisit the prior low from this bar back in August right here. And we have pretty much traded within this bar in August. So we made peekaboo highs here, but we have retested the support level. So we're not letting go. We're still it's kind of like the price is choked up right here. So it really needs to release some buying pressure over 31.50 to erase all that clutter from the left-hand side in order to propel higher. Daily chart, messy. It is trading above the 200 SMA. I wouldn't even bother with the daily chart. I would trade it more based on the weekly chart, taking into consideration that the risk is really good compared to the potential reward right here. But until it dissolves this resistance at the 31.40, 31.50, and still we have this little chop here into the 31 and change, but that may be a little bit lucrative. We still need a washout bar, in my opinion. So we need a bar that is going to take out all the highs and then pull back to set up a little better, or we need a bar to the downside, set it up, erase all the top to the left-hand side, and then let the dust settle. Weekly chart, like I said, I like the weekly chart better than the daily chart. And I still think that it has potential for the upside. Now, things are going to be pretty much decided tomorrow, and we'll see how the market reacts. Oftentimes, I know that in, post FOMC, and especially after a rate hike, financials are pretty much the ones that are going to react. Gold is going to react. Silver is going to react. So we have some precious metals that are going to react into tomorrow's decision. But nonetheless, this is going to be a troubled zone. And keep in mind that last time when we had the rate hike, financials did not participate as well. They did a blip to the upside and then they corrected again. I don't know if everything is priced in, or if financials even care about this anymore. So we will just have to see what happens tomorrow. I wouldn't touch it. I wouldn't touch it right now for anything. I would let it settle. It's not ready yet. So it's not ready to go higher or lower. It's just sitting there right in the middle. I wouldn't want to have my money invested in this and just sit on it.
Great. Thank you very much. Larry.
Yeah, so totally agree. You can just see here again, the weekly, you've got great support, through here. This is a 50 simple moving average. So, coming in at $30, you've got a 21 exponential, and you can see all the price action. See all the price action there where it's hitting support and holding. So just a lot of support right there at 30. And then to get a move to the upside again, just pretty much in line with what Anka was saying, you need to get some separation up here. You can see that it came up from this swing high to low. That's a kind of a swing high to low. And there's a 618 retracement where it could not get back through, failed. So, we'll see what happens with the FOMC, but it could easily pull back down here, retest that $30 support level, and then see where it goes from there. But it needs to get involved in this. You needed to get a break of this 30 and some separation on a closing basis, or a break of this 31 area, that 618, on a closing basis and get above that. So you can see where it failed. 2 times it tried to get up there and above, couldn't do it. So the 618 is very key. Now if you can get above that, then boom, back to that prior high, and then back to 32.5. So in here you do nothing.
And I am in total agreement with that. But leave that chart just for me for a second, Larry, please.
Sure.
What I want to add is I agree with what both Larry and Anka have been saying. And Anka, I really like what you said about, the washout. It needs to put in a large bar, which is going to clean everything out, get it to a position where it pulls back a little bit and then continues on in the direction that wherever that bar comes in. Now, I feel that if it's going to be a long bar, it's going to be just like that one that happened 1, 2, 3, 4, 5 days ago. If you get another bar like that off of the reaction, maybe from tomorrow or coming up, it's going to wash all of that selling out, and it's going to take it back above that 31.62 level. You can get up there, then that is more of a bullish picture, and it's going to really be strong to be bullish. So whether the stock pulls back much or at all will be yet to be seen. Now, on the other hand, I'm looking at my daily, and on my daily, I've got a 9-day moving average, And it got kissed today, we'll say. It went down and it came back, but closed just above it. Now, right below that on my daily chart is the 200. And this 200 is sitting right at 30.42. 46 right now as of today's close, 45.46. If you get a candle similar to the one back in mid-August, that large red candle down, that's going to wash out all of that as well. And it's going to trigger a lot of negative energy pushing itself into the stock. And then that would suggest we're going to go below 30, and we're going to start heading down towards what I would peg as next support, major, stronger support, below 28. And then that, if it broke below 28, you're going to start to get, just get a more defined number. It actually would have to break below 27.60. And if it started to do that, then the rally's over, kids, and it's dropping. And I would then expect it to drop down probably to the 26 and just below 26 before it would find any stronger support which to mount a rally off of. So a lot actually is going to come in view for us once we start getting all the fundamentals, you know, interest rates, once that decision's made, the broader market, what happens there, we'll see. And then that's going to be able to tell us what direction the stock's going to go in and what positions we need to have on. If you're long the stock, I think you need to be very cautious right in here, depending on where you are long. If you're long from below, like in the mid-20s, you're going to want to protect your profit. And so there are different ways to do that, and I'm going to leave that between you and your own financial advisor. But there are ways to protect. If you are short the stock, then I think, yeah, you also have to protect yourself against a breakout above. And there are ways to do that, even just, you know, putting a stop on the stock, on your position. But short term, I think, again, we're going to be on the sidelines on this one, like everybody else, because we need to wait for tomorrow. We need to wait to see what actually comes out. Before we move on to Apple and any others that we may get, first I wanted to just check with David. David, has anything come in that people have something specific they would like us to look at?
From the live audience, not yet, no.
Okay. In that case, before we go to Apple, I want to do a quick round robin. And again, we're just going to basically say if you have a particular stock or an index or something that you favor or disfavor, but you want to recommend any type of a position, that would be a good time. Let's go try to do that now. And again, we'll begin with Anka.
Okay. Well, this week has been a very thin week for me to call swing trades, but I have Facebook on my watch and I do have SLV on my watch. So I'm just going to put a quick chart of SLV. Silver also, if you guys are trading futures, it's /SI. And I'm going to bring the chart up to show you exactly what I'm looking at. First of all, SLV, this is, again, an ETF at SLV, not SLB. Hold on. Okay, SLV. All right. Typo. All right, so here we have it. It has a double bottom at $13. It's the weekly chart, and it has already moved to the upside. Now, I wanted to look for more confirmation, so I didn't get the first trigger off the weekly chart. I let it move a little bit higher and to test and retest this area. So this is based on the weekly chart. Also, the monthly chart, I like the fact that this month, so for the month of September, we still have a few days left, like 3 trading days left, Wednesday through Friday. And if we finish off with this bar right here, you can see that I already have some alerts that are set up here. If we finish into the green, this is going to be a very powerful trigger that is going to come in play into next week. That can potentially bring the price higher into the $14 and change and into this 10 EMA. So it does have some room to grow. And that would be a first initiation of this double bottom formation into SLV. This is a way long oversold ETF. Actually, the weekly chart looks, we spoke about the weekly chart. It just closed the gap right here. This is the first test of resistance. So this was the first area that it needed to complete in order to set up. And from the daily chart, it had a really nice ascension into the trading session today. So right now, tested. So what is really nice is that it tested this $13.70 and it pulled back. Now, very interesting to see how the overnight trading session is going to treat silver in futures. I trade futures primarily for day trading, and I swing trade futures as well and swing trade stocks. But right now, it looks to me that silver SLV is actually finding support into this prior low that was set from this gap down. The more that silver SLV will establish support here into the 1350, I can see a possible rotation that may take the price higher, like I said, into the 1380 zone and possibly into the $14. And this is going to be a really nice risk to reward trade. Hourly chart as well, looking pretty good. And we had the big igniting bar, and we have topped off into the 1370 and pulled back. Now these, I'm looking at the pullback locations. Primarily, I'm looking at the 1350 zone. I would love for it to come back, root into that 1350, rotate off of that 1350 for higher, so I could have less of a risk, especially for a mini swing trade into the $14. Also, silver, and this is the futures silver. It is, let's go back to the monthly chart right here. Also, double bottom formation, a little weaker than the ETF. However, the weekly chart has rotated, nicer pattern. It has proved that it can take out this high, and it does have a lot of room to continue higher. So it ran into the first area of resistance, and this is from a prior pivot low, and believe it or not, is from way back here. And this is the pivot low from way back in 2017, and that's from February. But look what happened when we retested this low. So we had a really nice move to the upside, and then we had the avalanche to the downside. So I think that we can expect a short squeeze in silver in the upcoming, I would say possibly days. Now, I'm not going to get into a trade as soon as tomorrow morning because I don't like the volatility that the FOMC creates and those whippy waves. So I'm just going to stand back and wait for some corrections and some retracement. This is just a heads up of what I have on my watch. And also, as a stock, I have Facebook. I'm looking into some options on Facebook. In fact, I have discussed this with my traders in the trading room, and I think that this may be a nice opportunity for Facebook to rotate higher from this weekly. So I'm looking at the 166.50 to 167, and also, so the 160 to 167 area is what I'm watching. Also, let's not forget that we're running into window dressing time. So we have seen some really nice progress through Google throughout the trading session today. Cisco just made a new high today. NVIDIA, a really nice rotation off the 50 SMA. So we've had some progress into these high flying stocks. And perhaps one of the reasons why NASDAQ was so strong today was because we are getting that movement into people. Traders are legging into these high flying stocks to carry them into the end of the quarter. So Friday, not only the end of the month, the end of the quarter, window dressing is going to be in full blast, probably Thursday through Friday, but we see some effects right now. So what I'm looking at is Facebook blasting over $66 primarily. It's going to be on watch. I can see a potential target level of 170. Obviously, you could play this with options with some calls. I've been looking at some 170 calls for October 19th. Like I said, I would rather trade the stock, but for a more defined risk, I actually look at some options as well. But When it comes to the daily chart, again, it has a lot of resistance into these double tops right here. So it really needs to get one more push above this 166 and change level before it has that final push higher. I think it has a lot of potential to run into the 175 and 180 zone.
Wow. That's yeah. That's all I can say is wow. Larry.
Yeah, so one that we set up last week was Disney. I think it looks good. So basically, I like to play what we call volatility squeeze, where you get a really tight consolidation. So here's a 4-hour chart. So you can see this was a nice. See how tight that squeeze was, and then trend line break, and then pops. Okay, so we just had one of those last week. So we set that trade up here, right here, with our alert service. So nice entry here, about 111. Got a nice pop here today. Took a little profit on the option trade, but I think it still looks good. You've got a really nice zone here. If you can hold this 113 level, I think Disney has some really good potential to the upside. So want to see it hold that 113. If it consolidates there, I think it's got potential for a bigger, longer term move. If you look at the weekly, you can see that it's, just based on these lows are getting higher, kind of gradually trending higher into some major resistance here. But if this, starting to chop away at it, if that breaks, then boom, you've got a really good potential for some continuation to the upside on Disney up to, maybe kind of that 120 level. So I do like Disney, but I'd wait, it already, we have an edge, so we can kind of wait it out. But if it can kind of hold here, this is what you want to be looking for. So Disney.
Thank you. That was a good one. Since I no longer really trade options as a market maker, I now have switched all of my strategies around, and I am a day trader, and I trade in the futures market. And currently I am focused on crude oil, the NASDAQ, gold, the Dow, and the S&P. And sometimes I'll drift over and do the 6E, which is the euro. With that in mind, the recommendation that I'm going to make is based on the fact that, since we are day traders, we have determined to kind of turn our focus onto the small retail trader. I think the small retail trader sees how these futures are trading, and then they try to make a decision that that's something that they want to do. And they're coming in and they're starting normally with much less capital than you would think you can do that type of moves. So what we've decided that we're trying to do is we're making a commitment to the small retail trader, and we're doing that through our associate trade room, which is Candlelight Trading. And within that, we're helping people to adapt to market conditions, to getting into the market, getting out of the market. How do you want to trade? What our setups are. We have several strategies that are being used, and they are proprietary, but are available. And I do believe that it is possible for a small retail trader to come in and trade futures and start with $5,000. Just as a matter if you know how. It's just a matter if you know how to do risk management, et cetera, et cetera. So we're challenging for people to come and check us out in the trade room. And again, you'll be able to find that on the email that David normally will send out. So we're offering a little bit, some good stuff there. On the other hand, going back to just things that I like, I continue to favor gold. My core positions, I have been long gold and I'm short bonds. Now, here's the difference and what's going on now. Bonds have slipped below 140. If they continue to drop below 140, I am taking the position off. And I've been short for a very long time at very good prices. And now that it's making its move, I have basically 10 points between 139 and 129, and that's huge in terms of movement, because I do have a target of 129 for the downside, and then the market rallies again, I hope. But in any case, starting to take that off and then just manage the gold. I still have a lot of confidence in gold. I really liked what Anka said about silver, because silver doesn't normally rally without gold, or gold doesn't normally pick a large rally without silver joining in. So I do think that there's some strong potential for gold to produce another strong rally. Again, I'm looking at the daily, and you're going to find resistance all the way up, but I think there's a lot of potential for a move back towards the 200-day moving average, which sits around 1285, and the further you go out, if you look at it monthly, it's going to be even higher. In any case, I continue to favor gold, and I'm taking off the bond position. Individual stocks, no. I don't disagree with what has been said about Disney or Facebook. I think those are both really good recommendations and very well thought out and very well stated. So thank you both for that. We now have run over, so I'm going to ask David, do we wrap it up here, Dave?
Yeah, let's get a quick closing statement from everyone. And
okay, Anka, we'll start with you.
All right. So first of all, thanks again for having me here tonight. If you want to reach out, we have a live trading room where every day we call live trades from live trades and swing trades. Actually, we day trade futures and swing trade futures and stocks. We have a transparent portfolio. Every trade is documented with entry, stop, target, etc. Discussed into the trading room. We also have an auto trading program. So if you don't have time to trade, you could check us out. Auto trading program under Trade Out Loud. It's tradeoutloud.com/auto trading program is the newest edition. And it is an extremely popular program. So if you want to request more information, you could visit our website and you may fill out that form. We don't have a lot of seats available, a lot of accounts available to be open. So you have to hurry on that if that interests you. So if you want to trade with us, it is tradeoutloud.com/live trading room. Again, we have transparent portfolio. And if you want to trade with us, you can hop on our website and check us out.
Thank you very much. And Larry.
Okay, well, thanks again for having me here today, David. I always enjoy it, and thanks for meeting everybody, Annika and you as well. And so if you'd like to see what we do, join me at paracycletrading.com. You can see here upcoming live webinars. Always list what we're doing here, so you can click on that. I've got one tomorrow night if you want to learn about, using some really great option strategies for hedging. So and for income. So join us. You can go in and log in. So upcoming webinars. We've got a trading room, got a lot of great free trading ebooks and tools that you can get. So visit me at paracycletrading.com. And thanks again for having me.
You're very welcome, and thanks for coming on. Again, I'm Michael Filighera. I am Logical Signals. I don't want to say I'm with Logical Signals because I'm the only one there at the moment. And what we're doing right now, again, is just to recap, is we are working with the small retail trader. And we're doing it with futures. And I am doing that in conjunction with a very good friend and a very good trader, Natalie Schaffner. And she happens to be located on the East Coast. And I'm on all the way in San Francisco. But nonetheless, we have kind of put a lot of energy into the trade room. And we're committing it, and we are focusing on that small retail trader. So again, if that has any interest in you, and you would like to learn about trading futures, or maybe you already are trying to trade futures, it's a good place to make a stop. Natalie has strategies that fit for scalping, for runners as we call them, and what the setups are, and the different strategies that we use every single day. And what we're attempting to do is we don't walk in and try to say what we think the market should be doing. We allow the market to tell us, which is a better way to trade futures if you've ever attempted to do it with an opinion. And with that in mind, I'm going to say, David, thank you very much for having me back to moderate. It's always very educational for me as well as everybody else. And I certainly have enjoyed today. Sorry for the difficulties that we had to begin with. And I'm going to turn it back over to you.
Oh, yeah, no problem. Thank you. Yeah, just great show. Just want a quick announcement from if for any of you who have seen previous episodes, you've probably seen at least one with Matt Buckley of Top Gun Options. He's been a long time guest and moderator of the show. He's having a special event this whole week where he's sharing how he trades. And so if you want to learn more about that, you can just go to the main TimingResearch.com page, and you'll see a little banner on the right, on the sidebar on the right, with a link to more information about that. Also, just a reminder, be sure to go to you can subscribe to Timing Research on YouTube or your favorite podcast network to get updates on future shows. You can also go to TimingResearch.com to get access to any of the past show archives. So this is the last show for September. So we'll be back next week with both shows, October 1st, Monday, 1 p.m. Eastern Time, and the next episode of Analyze Your Trade on October 2nd, Tuesday, 4:30 p.m. Eastern Time. See, a few people I have on the schedule for next week are Rob Hanna, Norman Hallett, John Thomas, Neil Batho, Tim Richette. He'll be a first-time guest. Dean Jenkins, Christian Fromhertz, and Hema Reddy. So be sure to watch for information about that. You can also always go to TimingResearch.com/live to get updates or watch the live episodes. And just want to thank my guests again for this week. Anka Metcalf of TradeOutLoud.com, Larry Gaines of PowerCycleTrading.com, and Michael Filighera of LogicalSignals.com. Thanks, everyone.
Thank you.